Well, retail investors are aware that inflation remains stubbornly high, so they're loading up on long-term assets to build up their position in the stock market. This, according to a survey from Finimize that showed 68% of investors polled think the global stock market will be higher a year from now. Well, for more on this, we welcome in Carl Hazeley, Finimize head analyst. Good to see you, Carl. Obviously, this has been quite a turbulent time for retail investors when you compare it to the record inflows we saw in February. I believe 1.5 billion daily through February, according to your data. Where are we now once they sort of factor in things like the banking crisis?
Thank you for having me on, Rachel. Maybe to set the scene, after a tumultuous 2022, we had a very optimistic start to 2023. And if you fast forward to today, we're in the middle of a banking crisis amidst other uncertainties in the macro space in particular. And what retail investors are doing right now is exactly what professional investors are doing at the moment right now, which is actually taking some risk off the table and taking their foot off the gas.
So with that in mind, then, what are they doing? What's the outlook then for the next 12 months for some of these retail investors?
Yeah, great question. So our data shows that about 2/3 of retail investors are sitting on somewhere between $5,000 and $50,000 worth of cash right now. But as you said up top, a significant proportion of these people are expecting stock markets to be higher 12 months from now. So over the longer term, they are optimistic, but given the uncertainty at the moment, they are looking for a more attractive time to start to buy back in.
And we were looking at meme stocks earlier in the show. It's interesting because in your data, it says that only 5% invested in meme stocks in the last 3 months. What is it that they're considering then when they're sort of trying to address whether or not to jump into meme stocks?
So meme stocks are really interesting because actually, if I go back 3 months to our previous survey, only 15% of modern retail investors said they had ever invested in a meme stock at all, right? So 85% of them hadn't. And fast forward to now, only 5% in the last quarter have invested in meme stocks. But that makes sense in the context of, the uncertainty that's out there right now and people taking their foot off the gas and risk off the table, in that retail investors are buying fewer single stocks because of them taking risk off the table. They're looking more towards ETFs when they are investing, and they're looking more closely at fundamentals.
And so with that in mind, we're seeing only 25% plan to invest in Tesla, favoring Apple. Apple is usually sort of the market favorite here. What are some of the top picks for retail investors for some of these mega cap names?
Yeah, that's right. So Tesla, I think if you look at how it's performed this year, has had a fantastic start to the year, and the share price has maybe stalled a bit. And compared to where, how the risk reward in Tesla maybe looked earlier in the year, that's perhaps not quite as favorable from a retail investor standpoint. And that could explain why they're shying away from Tesla and in favor of Apple. Where else they're interested in? Big tech is still interesting. Despite last year being tough in the big tech space, we're seeing a lot of them cut costs, right-size their staff, and focus a bit more on profitability, which, again, retail investors think, okay, well, in this environment, actually, that could be quite exciting.
And so then, because for these retail investors who perhaps don't want something as risky, is that why we're seeing not as much interest with AI investing, despite what we've seen with the popularity, at least in the headlines, when it comes to things like ChatGPT and OpenAI?
Yeah, I think there are two interesting things on that. I think the first is that about 1/3 of our respondents said that they are considering using AI in their investing. So I think it shows you how far the likes of ChatGPT have to go in really being able to support that investment process. But on the other hand, the technologies that AI will enable are super interesting to retail investors. And so the likes of NVIDIA, Microsoft, Alphabet, to name some of the biggest, are super interesting and getting a lot of attention from our retail investor audience.
And they do seem to be quite optimistic about the year ahead. Are they being too optimistic at this point, given that there are still so many unknowns about where the Fed is going, how long the banking crisis is going to continue to reverberate?
Yeah, look, there are lots of major uncertainties out there, but I think the optimism is underpinned in two things. First, there's a lot of cash on the sidelines, not just retail investor cash, but we've seen recent survey data showing institutional investors pulling cash to the side. So that money will likely come back into markets over time. And the second is the advantage that retail investors actually have, which is they can be really long term, right? They don't have an annual benchmark to hit. So they can afford to think beyond just this year and think multi-years into the future, and therefore be optimistic about the direction of markets over time.
We'll certainly continue to keep an eye on retail investor activity. Carl Hazeley there, Finimize head analyst. Thank you for joining me this morning.